Let's talk market and the investors looking ahead to tomorrow's monthly jobs report. Let's bring in Jason Trennert, Chairman and CEO of Strategas Research Partners, a Baird company. He's a very cautious person. Would you say that did you ever turn bullish? When did you turn bullish?
At the end of, when we realized we were wrong at the end of 2023. So we've been bullish this year.
So
we did
still
call for a recession last year, which didn't work out.
Right, but it was hard in 2022 and 2023 to look at the market and think that it wasn't going to make new lows. That was a different, because there was nothing indicating it should move higher, but it did.
It's a lot of this has been. A good portion of this has been multiple expansion, right? So earnings have clearly kept up, but the big turning point in 2023, this is ancient history now, is actually when Silicon Valley Bank failed. At that point, the market was flat on the year, and then it took off because we essentially backstopped all the deposits in the country. The Fed flooded the system with liquidity. Then at the end of last year, it's hard to believe, but 11 months ago, the S&P 500 hit 4,100 briefly when 10-year Treasury yields hit 5, and then Janet Yellen stopped issuing long-term interest rates, long-term
and also
notes
backstopped. Yes,
and so market then took off again. And now, frankly, it's hard to get. We haven't been bearish this year. We've been bullish this year.
Well, now maybe you should be bearish.
Maybe
now.
I should be.
At 22 times earnings, right? And we know we're in an easing cycle now. What positive, what that hasn't already happened, positive can still happen?
The only thing could happen is that earnings actually come in as expected next year, because the earnings expectations for next year are about up 14% for the S&P 500.
Up 14.
Right. The only problem with that, and one of the questions you asked in the pre-show is like, what is inconsistent? One of the things that's inconsistent is that the market's looking for 6 easings. At the same time, they're looking for a 14% increase in earnings, and that doesn't happen generally.
Because you'd only ease 6 times if things weren't going great.
Right. So it doesn't. To me, that's the issue. By the same token, do you want to fight? Right now, you're fighting everybody. You're fighting the Fed. You're fighting the federal government in terms of deficits of 7% of GDP. It's an election year, so it's really, in my opinion, it's really hard. The bar is high to get bearish from here. What we found is if 10-year Treasury yields are above 4.5, that's when the market tends to have some indigestion. But below 4.5, 380, it's hard to get bearish.
You like gridlock? Is that what you're hoping for? I think we hit 35 trillion.
Frankly,
yesterday or something.
Frankly, I'm not hoping for gridlock. I mean, you know what I'm hoping for. I'm hoping for a real change that is much more free market oriented, because gridlock is not producing. The problem with QE for 12 years is that it's created an enormous moral hazard on both sides of the aisle that spending doesn't matter. I mean, remember when Carville said, I want to be reincarnated as the bond market because it scares everyone? There's no one, Republican or Democrat now, that's afraid of the bond market. And to me, that's a problem, because we're just compounding the problems by continuing to spend money we don't have. And eventually the bill will come due for this.
But the Republican Party has not really talked about bringing down deficit spending.
This is a bipartisan
tax breaks that they're
offering.
If
you believe only growth can solve it, then I don't see. Yeah.
That's my opinion. Okay. It's the only way out. We're certainly not going to, in terms of tax revenues.
Democrats would say we're getting growth now with the Democratic administration.
Well, you're getting it because you're running deficits of $2 trillion a year. I mean, so you're just robbing Peter to pay Paul.
That's this year in a rip-roaring economy. We hit $2 trillion.
Yeah, we're running deficits as if we're already in recession. We've never run deficits of this magnitude when the unemployment rate was below 7.
And the Fed's easing.
The Fed's easing.
In a rip-roaring stock market, and it's all impossible to figure.